Phil Streible is joining us this morning to take a look at the numbers here. Market Reaction 2. He's the Chief Market Strategist at Blue Line Future. Phil, good to have you with us here this Friday morning. Let's dive right into it. It looks like core PCE, the index in line with expectations on a month-over-month basis, year-over-year as well. And again, I'm just kind of noticing here, personal income and spending, really no real scare here, I guess, in terms of inflation. And we're kind of seeing that reaction in terms of the indices. They're just sort of hovering right around these levels they were at as we headed into the number here. I saw the Dow briefly tick positive, but again, kind of a muted reaction, I guess, is the best way to put it.
Yeah, I mean, the correlation between personal income going up and personal spending expanding, is quite high, but I think it's slightly different for the consumer. I think the consumer is actually in bad shape. And the reality is that the inflation that's been coming out is really hitting the consumer's pocket. They're really starting to tighten up. I think, short products like retailers and also consumer discretionary, I think is a way to position and also hedge your portfolio. So I'm not entirely optimistic on U.S. equities, and the bounce that we've seen is no surprise. You look at from the January 3 high on the S&P down to just this recent low, it's sold off 1,000 points. I mean, it's going to have some bear market rallies here and there, but I don't think that the bear market's over. I think it's still going to weigh in on a lot of different companies. So I'm not painting that rosy of a picture. Understood.
And you're not alone, I think, in that camp. There's been a lot of people talking about how, again, the headwinds that we've seen since the beginning of the year, since January, while they may have eased some in terms of what we've seen, again, they remain. And I just want to point out, as I take a look, I'm noticing the year-over-year number, actually a bit of a slight downtick here from 6.6% it was down to 6.3. There it is. So that's going to ease some of those concerns. At least it didn't increase. That's again, a good thing. Talk to us a little bit. Earlier in the show, we had a chance to talk commodities, but we were mostly focused on gold and the metals. I want to get your thoughts on crude. We've been seeing that rally. Again, one of those headwinds, I guess, for the indices. Tough to kind of get excited about stocks and stock index futures products with crude at $115 a barrel, prices at the pump at record highs. And again, diesel, across the board. Natural gas this week, a huge move up through the $9 level. Talk to us ahead of the OPEC meeting next week. Do you see any relief, Phil, in terms of the supply side?
Surely it doesn't look like it. It looks like, the producers and, the OPEC nations are quite content with what they're pumping. There's no real, we're not seeing geopolitical tensions ease at all. It seems like we're getting higher lows in the energies. The XLE looks really good. Any kind of correction there, that's been a great buy. Crude oil, same thing. Any pullback we get there, great buy. I don't necessarily believe that we're going to go up and retest these recent all-time highs in crude oil, but I definitely think prices are quite elevated. It will play an impact on, how the consumer, how they travel and things like that. I'm already looking because, jet fuel, those inventories are at record lows right now. So I'm weighing in flying back to Chicago next week. And is it going to be the price of a plane ticket, which is pushing, $500 to $1,000, or is it driving, which, doing the math, I don't know if that either makes sense either. So, it really starts to impact people and the consumers.
Yeah, it has, no question. To the point here where we are having to make some decisions, as you mentioned here, on an individual basis, it seems to be. Let's talk a little bit about rates because, again, the Fed this week, the FOMC minutes, kind of easing concerns about potential for a 3/4 basis point rate hike, 0.75. Fed chair, or the minutes, I should say, seem to kind of suggest that we're going to see 2 50 basis point rate hikes, one at the June, one at the July meeting, and then they would kind of reassess where things are at that point.
We'll see both of those 50 basis point rate hikes. The 75 basis points not going to happen at all. I think the Fed will continue on a path, raising rates. The problem is that they're fighting inflation, and the inflation, I don't necessarily think that, raising rates that aggressively is going to take down, things like crude oil or, the agricultural markets, but it may impact, the housing market. It's been a lot more costly. You're seeing the price of houses up 20%. You're seeing purchasing power, with mortgages, that's gone down 20%. So you want to buy the same house, significantly more expensive. And there's no replacement there. So, I really think that the only way you start to see things start to lift back off again is the Fed's not going to pivot dovish once this recession comes, they'll pivot more neutral, and then you'll get the relief rally, and then we'll probably have some kind of bottom in place.
Well, I mean, kind of again to that point, we've been talking a little bit this week about how when people talk about peak inflation, ultimately you kind of just something about the word peak implies that you come off quite rapidly, but we could be in a position where we hold these upper levels for a sustained period of time.
Yeah, peak is, tops and bottoms, those are processes and they take a long time. I mean, crude oil could be making a top right now, but it's going to have to build out that pattern of a series of lower highs and things like that. And it just hasn't done that. We have seen some relief in certain commodities, like, the grains are significantly off their highs, cotton's significantly off its highs. But then you look on the flip side and it's like coffee's threatening its high. Orange juice is breaking back out to the upside. You have some of the metals are starting to, base out. So, I think that this inflation, it's kind of more of a, it's like a 3-card monte game of where it's going right now. But, energy is definitely, that's going to be a problem until you start having, policy changes and political changes to relieve some of that.
Yeah, coffee, a good point here. Corn, we've been watching wheat, beans, for the most part, remaining at these elevated levels here. So it's not just prices at the pump, we're talking the checkout lane as well. I wanted to get your thoughts on the U.S. dollar because it's eased off a fair amount. Sometimes, Phil, it's tough to determine, is it a weakening dollar as rates have pulled back? Those two have been very closely tied recently. But then there was also some strength in the euro currency this week with Christine Lagarde and some comments about turning the corner and kind of going into a higher rate environment for the ECB, which many have argued they've been long behind the curve. What do you see kind of tipping the scales this weekend behind the recent move?
The currencies have been a bit of a head scratcher. I mean, we're seeing the dollar weaken right now. It's been in such a strong market. It's been so good since the beginning of the year. We're backing off, so it's hard to tell, is that peaking and what is the euro currency has that bottom. We've seen, some significant rallies in things like the Swiss franc, and the euro currency is starting to push those upper boundaries where it could be breaking out to the upside. So, we're going to have to wait and see on some of these currencies. I'm not entirely convinced that the bull market in the dollar is over. So I think that the Fed could still get even more hawkish, where all of a sudden we start pricing in more 50 basis point hikes, and that gets the dollar, back up, and we start to base out and build from there.
Yeah, I just want to real quick, I've got a dollar TNX chart here somewhere. It'll take me just a second to find it, but struggling here with this one. I'm not sure exactly where it is, but yeah, these two products have been very closely tied as of recent here, to say the least. I think I just saw it. There it is. Dollar TNX here, you can see, again, almost a tick-for-tick environment, and as they roll over here as well, so something to keep an eye on there. Talk to us a little bit about next week here, Phil, in terms of as we move past the focus here on some of this inflation, the Fed minutes this week. I think we're going to quickly kind of shift gears and start to discuss labor conditions here again, right?
Ben, I think you're getting ahead of yourself. We got an extended weekend. It's how many fish are we going to catch? Real question here. What's the over-under? Is that a bull market?
Phil, I wish I was fishing this weekend in many ways, but I have to push my trip off to next weekend, so I'm going to let you guys tear up the water a little bit, but save some for me for sure. Talk to us a little bit about next week, though, and then we'll get into what you're fishing for a little bit off the air here. I didn't know you were a fisherman, but in terms of fishing for economic data next week, what's the big catch?
I mean, we're going into a new month. So new month, new optimism, new jobs report. So we'll see how the labor market, I think that's the big one to watch kicking off. And, is the labor, is it starting to tighten again? Are those jobs being filled or not? That's the real question. So I think that could really fuel the economy if you see labor really pick back up again, because that'll get the consumer will start having their personal income will go back up and the personal spending will recover from there. And that could help the bottoming process.
Phil, appreciate you joining us. Tell the guys at the bait shop I said hi, and I'm not far behind you. Phil Streible, the Chief Market Strategist at Blue Line Futures, joining us here.